This central bank is rapidly cutting interest rates, and it's sending a major warning to banks all over the world, including the United States. So much so that Jamie Dimon himself is warning investors that they're getting too complacent. Now, first, we're getting into all of this and how this central bank cutting interest rates is sending waves globally. But first, we got to get into the nitty gritty, the details here, folks, as to the Swiss National Bank has started cutting interest rates. But there's inflation risks of this, quote, falling below zero in individual months this year. So it may fall below zero. And that's according to Martin Schlegel. For this year, inflation in certain months can be negative. We always focus on the medium term, and that means in the short run, inflation can also be below zero or above 2%. It sounds like, long story short, they have no idea what the hell is going on with inflation. But the interesting aspect of all of this is that the central bank of Switzerland started cutting interest rates back in September of last year. And what are they using now as the crux for the reasoning of cutting interest rates right now? Of course, they're pinning it all on the tariffs. And so having inflation now at a low rate means that something fishy is in the air, because you generally don't see that in central banks and in, the seventh largest GDP per capita here in Switzerland. But anyway, that's beside the point. We are seeing a huge 50 basis point cut in December of 24, marking the largest reduction in nearly a decade. Now, let's remind everybody, when did Trump's tariffs come into effect? He didn't even get into the office of the United States until January 20th. So the Swiss National Bank cut interest rates at a record high pace before Donnie T even got in there. So the headlines of, hey, it's all about the tariffs might be a little misleading here. But regardless, this brings key interest rates to 0.25%, the lowest since September 2022. So they could be looking to take interest rates to a negative, which isn't common for anywhere globally. In fact, very few nations around the world have ever done such a thing. The latest that has done it is Japan. And when they rose interest rates by just 0.25%, that Japanese carry trade sent shockwaves throughout the entire world, including having markets move more than we saw in COVID times and more than we saw in the 2008 boom. So this is all to say that these interest rates are definitely in a hairy position. The Swiss National Bank has signaled there's a potential for further rate cuts, and it remains cautious. It will likely monitor economic data before making further decisions. But this is all intertwined with current investors. Now, the current investors are looking at this, and even Jamie Dimon is warning that stock market complacency has kept shaking off the bad news. So there's bad news coming left and right. The investors are dodging this bad news like it's the Matrix and just keep on piling money into the stock market. But we're seeing Jamie Dimon, the world's CEO of the largest bank, now saying that stock markets are getting complacent. Now, why should we listen to Jamie Dimon? Well, there's a few different aspects of all of this, right? We're seeing Wall Street now. Shadow banks are on a tear. They want your money. These shadow banks are now working extremely, extremely close with, the giant banks of the United States to essentially lend out money and get cheaper capital for these big, giant banks. Okay, so with all that, why are we looking at these shadow banks and why are they making giant headlines? Well, because these banks exposures, shadow banks exposures, lead to a huge risk. So lending to these non-banks is now growing rapidly and it's bringing a huge risk. it's also far outpacing the growth in traditional commercial lending. So it's really anything that we've seen previously. Well, we're putting a little gasoline on the fire, and it's more closely linking their fortunes and potentially creating an emerging risk. And a new report, the reporting agency said that loans from banks to non bank financial institutions rose 20% year over year, compared with a 1.5% growth in commercial lending over the same period. So these shadow banks are now saying, hey, Jamie Dimon, come to Papa, give me all the money so we can start using it in different financial institutions, financial ways. And it's now getting a little bit hairy here, right? We're not necessarily looking at this and saying that this is a positive here. The non-bank lending category includes collateralized loans to mortgage companies, REITs, insurance firms, financial companies, private funds, and securitization vehicles. Well, what happened last time in 2008? Well, everybody was lending out too much to these, quote, bad actors, right? They were lending out, to teachers for $800,000 homes. And that's not happening now. Granted, these guys are big, giant money managers, but it seems like banks are leaning and getting more risky and potentially getting into the over-levered aspect of this. And that's something that we have to keep a very, very close eye on, because the amount of leverage that we can be seeing here can be very dangerous for the banking system. And we saw what happens when some of these shadow banks run rampant. Not too long ago, we had Silicon Valley Bank was a major bank specializing in the servicing of technology, venture capital, and private industries. But what happened to Silicon Valley Bank? Its bank collapse in 2023 triggered a run on the bank after previously announced capital shortfall, and a loss on the sale of securities led to the failure of the bank. Well, Silicon Valley Bank is a good example of these, quote, shadow banks that are getting lent to. So we have to be extremely cautious when we see these headlines about the shadow banks and what we're seeing about globally, what the Swiss are, quote, ready to consider negative interest rates, because they're looking at these things and saying, he said the great risk currently facing the Swiss central bank is prevailing uncertainties on the market, the volatility of which has exploded. Oh, yeah, it's because of the recent trade war by Washington, right? Even though they made that 50 basis point cut in December 2024. So it's watch what they do, not what they say here, folks, because we got to read through these tea leaves. We've got to read through the signs of what we are seeing here, because they're going to tell you, and they're going to point the finger at Donnie T and the tariffs. Look, I'm sure that they're not exactly helping out the cause here, but on the flip side of things, they're covering up, and they're, basically looking at this as, hey, this is a life raft that Donald Trump gave us. We can now point the finger at the US and blame him and say, hey, Donnie T, this is why the Swiss government is looking to get bailed out here, right? This is why, we're having some troubles over here across the pond in Switzerland. But there's a meeting in mid-June, that will look at the global growth, particularly the repercussions for Switzerland, as the Swiss franc, a safe haven that has strengthened by almost 9% over the dollar since the year is starting to wane. I wonder why. Well, a big reason why the Swiss franc is starting to wane, the strength of it, is because of what Jerome Powell has been doing. Look, I think that he's going to crash the markets at risk of potentially just making sure that the dollar is strong here. But he's doing what he's trying. He's trying to go America first, the US dollar first. And so we see a 5.4% chance that the US is now going to cut interest rates at its next meeting. Now, 5.4% chance. Look, I'm not a betting man. Okay, maybe I am. I'll be in Vegas next week. But It seems like the odds are more likely that the US is not going to cut interest rates, right? But it has seen some waning in the dollar. Look, we're up a little bit today, but if you guys have come and joined these great live streams over here on this channel, you know that I show the Dixie on almost every single one, and it was sitting over 100 for some time here, and we are seeing it start to wane a little bit now, right? We're dipping below that 100 mark. And on top of that, we're seeing the market also, look, it's not crashing, but look at this big giant red candle here. We don't like to see too many of those. But on the day, we're having a negative week so far because, the market hasn't liked exactly what it's seen. We've seen craziness in the oil markets, the potential of war continuing to break out, and then we have the uncertainty around the globe. The Swiss National Bank's key interest rate is currently that of 0.25%. Now, if it's only 0.25%, and most economists expect it to cut to 0% at its monetary policy announcement in mid-June, well, it could actually float a little less. Look at this. Look at this range that they're talking about here. It could be anywhere from negative 0.25 to 0.5%. And that just highlights the amount of market uncertainty that we have currently. And obviously, that's at the helm of Donald Trump because he's very sporadic in his decisions, is how we'll say it. He essentially, flips a switch at the drop of a hat. But with that, it keeps people on their toes and needs to ensure that we have strength in the market around the globe. And so we're looking at how these things are going to play out here. And it's very questionable, to be honest with you. But, we're saying Jamie Dimon also warned everybody and saying that, there can't be any complacency in the stock market because of this dramatic uncertainty. And look, say what you want about Jamie Dimon, but he's got a lot of money managers going around. And I think he's very wrong on a lot of things. But when he talks, a lot of people listen. And so when the stock market is, maybe getting a little complacent here, Jamie Dimon has insight that many of us do not have. The talking heads here on YouTube doesn't have. But I think that it's going to be an interesting few months to see how the potential of this interest rate policy starts to play out. And time will tell. We'll see in the next couple weeks here, and then we'll find out here what the US is going to do in 26 days. We've got the countdown on in a little less than 27 days. But for those of you just joining me, make sure you smoke the like Cheech and Chong, and tell a friend to come on down to the Green Candle channels. 95% of you guys that listen to this thing are not subscribed. Let's change that. Help me get to 1K. Smoke that subscribe button with the bell notification so you guys can join me in the chat. Tell a friend to tell a friend. And I will see you guys all at the next one.